This conference will now be recorded.
Okay, so let's see if we can begin to look at this, a little bit for adjusting entries. And remember, it's always a difference. Okay, it's when you're making adjusting entries, you got to make a calculation. So with supplies in the future, I don't want anybody to miss this. It's a difference. So you will see this on the final exam. It's a difference. Can everybody see why the answer is 40,000? Is there anybody who does not see why the answer is 40,000? You bought 50, you got 10 left, the difference is 40. Will you get this right on your final exam now?
Yes.
Okay. In the second one, well, let's go to see if we can put a supplies to your account in here. So we said we bought how much in supplies that first year? 50,000, correct?
Yeah, I also had a question about that too. Like, I noticed you put this on the quiz, but I'm trying to figure out what is the value of using the T charts. Because I never, like, personally, I don't ever use them. 'Cause I'm like, what do you want us to do with that?
They're
Like,
just there if you want to use them for a calculation. You don't have to use them.
oh, okay. All right.
So if you wanted to, you could. So then in this first year, we said that the balance in the account was 10,000. So the AJE is always over here, so I can sort of explain it better, hopefully. And it's over here as the difference between these two numbers. So if this is on your quiz tomorrow, on Thursday, will everybody get this right? If I put this on your quiz on tomorrow, will everybody get this right? Well, will there be anybody who will get it wrong?
I think I'll get right.
See, Daisha, I was trying to be friendly and ask. So you're not even speaking to.
The big question I'm sure on everybody's brain is, we got more quizzes?
That was on my brain.
Kayla, no, don't ask. Don't
Well, he
ask.
referenced the quiz. I'm like, we got more?
Okay, let's see if we can do number 2 right quick.
An even bigger question.
Okay, well let's
Bigger
go on with
question
2
though.
first. Let's go on with 2 first. We bought 25 and 30,000. So we bought 25,000 and we bought 30,000. So how much do we have now? 10 from last year, 25 and 30. So how much do we have?
65. Wait.
We have 65.
Yeah, 65.
What is the balance in the account now?
25, right? Wait, I'm confused. I'm trying to look and see what you did here.
2, what does it say is the balance? We go up here. How much does it say is in the account? 20,000, right?
Mm-hmm.
Okay. So the balance in year 2 is 20,000. So what might the answer be for the AJE? We got 65. We had and bought. We at 65. We only got 20,000 now. So, Cameron, how much might the AJE be?
It might be 45,000.
Okay, that's all we wanted. So, it's never the balance. It's always the difference when we're working with supply. So if you don't learn any other AJEs, you learn these two. Okay, you better do 1 and 2. So we don't want to stress you too much. C students, we don't want to stress you too much. So you just learn how to do supply. Okay, so let's go with Ms. Williams now. And I noticed that she knows there's more than one way to calculate depreciation, and we hadn't even talked about it yet. But there were 10 autos costing $40,000 each, and we paid $100,000 down. So how much did we have in autos?
It looked like it should be $400,000.
All right, $400,000. Who's that doing all that talking in my background, disturbing me? Okay.
My
Then we
fault.
have accumulated depreciation. And then we have the account depreciation expense. And so what we said was that when we have a long-lived asset, B students, different from supplies, we are not going to subtract from the asset. It's going to stay at 400. We want to know that. So when we calculate this depreciation, what was our life on this asset?
5 years.
5 years. So what's our depreciation going to be each year?
$80,000.
80,000.
Okay. So we're going to debit depreciation expense, 80,000. And we're going to credit what? Accumulated depreciation, which is a contra account. Therefore, when we get ready to do a balance sheet presentation for this week, just looking at these assets, we're going to show autos at a cost of 400,000. It's going to be less the accumulated depreciation. And the
So we got to
depreciation,
put the list right there?
yep, 80,000. So the net, and we call it net book value, net cost, net book value of the asset, and it's net book value because we're going to subtract auto less the depreciation, and so the net book value is going to be 320,000. So that's how it looks in the first year. Any questions? That's year one.
I guess I get how to get to that, but like, why
27.
exactly do we need the net book value right now? Like,
Say what
or
now?
do you just want to? I said, like, why do we need the net book value right now? Like, is this something you wanted to see, or is it something that
Because
we'll need for?
on your comprehensive problem, when you had a balance sheet, you had to show this. Your balance sheet had to look like this. So when
So
we
for
got,
those, I
yeah,
was
that's
gonna
how
say,
your
so for
balance
those questions,
look.
you want that every
So what
time?
now?
So for those questions, you want that like format for every
Yep.
single one for depreciation? Okay.
Wait,
When I
so you
asked
want that
for
as
the
a journal
balance,
entry? Because that makes sense for
when I
the
asked for
balance
the
sheet.
balance sheet presentation,
Oh,
this is
okay.
not a
Oh,
journal entry. This is
okay.
just balance sheet presentation.
Oh, okay.
Overly concerned, the AJ is the key thing. If you got that right, fine. So we're just teaching. It's there. I'm not going to take off if you don't have the balance sheet presentation. I will take off if you don't have the AGE. In the second year, we're still not going to touch this, but we're going to have another entry where we debit depreciation expense and we credit accumulated depreciation. So now the balance and accumulated depreciation account is 160,000. So if we're in the second year, we'll have autos still at $400,000 cost, but the depreciation, accumulated depreciation now is going to be 160. And so in the second year, the net book value is going to be how much?
240. But okay, so why in 2018 did you start with 400? Like we already established that the value went down to 320. So why wouldn't you start
Because
2018 with
we
all of the
won't
320?
always show the original cost.
Oh,
We're showing the cost, then we're showing how it goes down in value.
okay.
If it's a short-lived asset, we just subtract it straight out the account. But you're not going to do that on high-priced, large assets. We need to know how much is the cost of the equipment. We don't want 240. We'd rather know what it costs and how much it's gone down in value. That's better information. Okay, so that's what we expected for the balance sheet presentation. That's when you get to a balance sheet. So, we expect you to know that. Okay, let's see if we can share something else.
Professor,
Yes.
I was telling you that, like, obviously I couldn't, like, submit my thing, so I emailed it to you so
Okay.
that you can just,
Thank you.
okay.
But since you like talking, let's just see if we can go to those cash flow problems. So, what was the key thing I told you to be concerned with cash flow problems? What did I tell you the purpose of it?
Oh, to determine whether or not we're gonna make like good investments or something. Like you were doing the example with our mom and trying to like invest in some company or something, to whether or not it was supposed to be like a good investment or something like that. That's what I remember.
And how did we determine whether it was a good investment?
If you have a positive net value at the end. I mean,
Well, at the end, we wanted a positive value, but what else did we want?
Didn't you say that for investments it's supposed to be like a negative number?
That's
Or
what we're no, that's a good point.
oh, I thought that's what you were looking for. Okay.
Yeah, that's a good point. Investment, that is a good point. Investments should be negative, but what else did I indicate?
yeah, can you just go throw a reminder for us? Because obviously we don't remember.
Okay,
I remember you giving the example of like the 4 bachelors, with like the savings, like one of them has all their money saved and has like this much capital or whatever because he saved his money. The other one took out loans and like that. Then the other one was like stealing or doing something shady. But the purpose was is that we were supposed to choose the one that saved up all of his money because good investments. Yeah, that's what I remember.
so the thing that I really wanted you to look at is that when we looked at operations, you need money in operations. Okay, when you look at a company, there are 3 parts of the cash flow statement. Operation should be positive, and we said, as indicated by Shelby, investment should be negative because the company should be expanding. And then, on a new company, this may be positive, but we would like our company to be paying off its liabilities and ending up with a positive change in cash. Just like for you personally, you would like to have income. That's what, see, income to you is operations to the company. You want to be able to buy some additional assets. This is negative, when you graduate. And then you want this negative so you can pay on student loans and anything else you have and still have cash left over. So that's the key thing that I wanted you to see. Any questions?
Any question
I'm
about
sorry,
the
could you
specific?
repeat that?
Sorry, any question about the specific assignment? Because I did not understand something in particular
Okay, we're
that
gonna
I
go
want.
over it. But
Okay.
the thing is, what I want you to know is the importance that this top number is positive in operations. And the bottom in the next number, investment, should be negative. And this should vary, but it should be negative too, then this should be positive. That's what I want you to understand. Okay, now let's go to the statement. And so this, I think this is what, 4-4?
Yes.
Did you do the right one, Dawkins? If not,
Yes, because you gave us that when you said teams 1 and 2 do 4-4 and teams 3 and 4 do 4-5.
okay. All right, so we'll get to 5 next. Let's look at her scratches. Invested $200,000 to start the company, that's fine. Paid cash for supplies. Paid cash for the insurance policy, that's fine. Purchase equipment on account, scratch. Purchase supplies on account, scratch. Paid advertising. Purchased 10 automobiles for $30,000 each, paying $50 down. So her statement should be showing what? $300,000 here. And where's how much did you pay down?
50,000, which is under the cash flows from financing.
No. You should have 250,000 here. Just notice this. Where is that one at? This one's 7. Where is 7? Oh, here's 7, yeah. This should be 250,000. You bought it for 300. The net amount is 250 that you borrowed, and you net the 50,000. So that's how that's supposed to look. The cash going out was 50,000. So you're showing this long-lived asset at 300, and you showing you owe $250,000. Okay.
Okay.
Received cash car loan revenue 400. That's fine. Paid office salaries 80. That's fine. Paid rent expense 40. Then car loan revenue earned. That's a scratch. Paid on accounts payable. Collection of cash from corporate customers. Invested in an additional 100,000. Received cash car loan revenue. Paid sales salary. Earned. We scratch it again. Collection of cash from corporate customers. 25,000. Paid rent. Paid delivery. Ending supplies is a scratch. Because remember, adjusting entries don't have, they're not about cash. So you only miss one there, so it's not a big deal in general. So you just need to correct that part of it, okay? I'm assuming you put it in the right places because, we got where the types go. 1 through 6, it's going to be on the source side, 7 through 11 over here. But once again, would you invest in this company? That's what I want to know. So there's a roundabout way of doing the calculation. Would you invest money in this company?
I mean, yeah, I would.
Okay, because they're be doing pretty good. Okay, so let me see if I can. So that's the main thing. The calculation is not, what we're overly concerned about.
So wait, Professor. So
Mm-hmm.
I was looking at the example that you were doing before when I did that question that we were talking about the paying the money down. And
Mm-hmm.
your question was the purchasing 5 cars for 10,000, each paying 10,000 down.
Right.
So what you're saying is the money that you would put there would be like 40,000 because that's the money that you spent, like, or the money that's owed.
You got to put what's owed. You owe
Okay.
250.
Okay.
So you bought 300. You owe 250. That's what's important. You bought
Right.
3,000. You owe
Mhm.
250.
Yeah. Okay, I understand that.
So that was a good job by the team, just for one miss.
I have a question.
Okay.
It has something to do with the format. Okay, so I see that journal entry 7 can go both in the first section and the second section. What's the difference again? Because I think I may have messed up. Maybe.
If it's short term, current, it's up here. That's for 7 and 8. If it's a current asset that's purchased or if it's a current liability that's paid, it's here.
Oh, you know what? That is in parentheses. I probably should have read that. Okay.
Long terms are down here in financing. Okay, so that's flipping on you. Okay. Let's see. Trying to get out of this, and let me just see. So this you here, Kayla?
Yeah, I realized why I made a mistake. It's probably I put the journal entry 7 in the wrong part, which kind of threw it off, which made the wrong one negative and the wrong one positive. So I was sitting here looking at it again.
All right, so you've got the screen, Kayla. See if you can correct it.
All right, hold on real quick. I'm gonna turn my mic off because someone's working in the background. So. Wait a minute. Dang. Hold on, Professor Boyd. I don't know. I think. Now, I could very well be wrong, so I ain't that confident in this part yet. Hmm. I'm sorry, Professor Boyd. Give me 1 second. It's a lot going on over here. Just give me a minute. Okay. So, I'll come back and fix that in a minute. So this one. This. It should be.
Doing all that
Lord.
talking.
All right, I think it's fixed. Yeah,
Think it's-
yeah, I think it's fixed.
Did you attach your problems to this?
No, I didn't. I had them in front of me printed out.
Okay, so what was the first one?
The first one said additional investment in business, $200,000.
Okay, what's the second one?
Second one paid salary expense, which included $4,000 accrued from 2018, and the amount was $20,000.
So that was two. Why? Okay, but you got one up here in operations. Where should this go?
Where's my what?
Journal entry 1 on your sheet goes where? You say that's a journal entry type 1.
Yeah.
Where does that go?
Oh, it goes down on the third part. Oh, okay.
So this look kind of barren down here.
Yeah, I totally missed it. Or yeah, I missed that. Or maybe somewhere I saw, it kind of messed me right here. It says source 1 through 6. So I just like,
That's the total side though.
oh,
That's
okay.
everything.
Hold on, Professor Boyd. Hold on.
A source is going to be a 1 through 6 now. It can be in part 1, 2, or 3, Roman numeral 1, 2, or 3. And the use is going to be a 7 through 11, but they can be in any of those parts, 1, 2, or 3.
Okay, so the first one got to be moved on. You want me to fix that right now?
Yeah, go ahead and fix it. So this is an indirect way of looking at how the business is running, but it's a very important way.
Does it matter if it's out of order? Because I mean,
Doesn't matter. Doesn't matter.
okay. And that's the first one. It's 200.
You see, this is the money that you put in the company. That's not operations, okay?
Okay.
The concern in terms of doing the evaluation. So take that 200,000 out of operations now.
Do what?
Go back up to part 1.
Oh,
Take it out.
well, I'm about to delete all of it because I'm gonna have to recalculate it again. So it's a lot easier to do it that way for me. So
But you notice that produces a different impact in terms of how much money is in operations.
yeah,
And I also
I
have
see.
one thing to ask. In operation, in theme 4, we have written like go up. I think it's 8, journal entry number 8. Can you go up in the operation section?
Okay, what's
Yeah,
that?
it's 8. Yeah, it's 8 supposed to be say collections of sales on account. So it's supposed to be scratched off, or we have to put it up in there?
Yeah, that's what you're in the business of doing. So collecting cash on account, that's a good thing. That's operations. You made a sale, you collect it. That's the main thing you're supposed to be doing. So you can have cash sales, you can have a sales on account 15, and then you collect the cash 3. That's operation. That's the correct location.
Okay.
Any questions on any others?
Yeah, specifically number 6. Okay, so it said, and it confused me because I went back to the textbook and looked at how the example was, but I didn't exactly know what to do, so I may have messed it up too. It said purchase of land. The land costs $500,000. We
Okay,
paid
so,
$100,000 in cash, and the long-term note was for $400,000.
so you need that note where?
Let's see, the
Need it
note.
down here.
That's why I didn't understand, because I think last class you was like, with something like that, you documented as you got a $500,000 loan from the bank and you spent, like it
Where
was
where
confusing
the
for
bank
me.
loans go on the statement.
Well, if I got a loan from the bank, it's borrowed money, number 5, right?
Yeah. And if it's a long term, it goes in part 3.
See okay, did I write that? I don't know. No, I didn't, clearly.
So you
So
should
what's the
have it
right
under
way
the
to, because I know
200,000.
this is gonna come up again. I don't know how to do it correctly.
So put it under the 200,000.
So number 6, and then
That'll be a type 5 long-term loan.
okay.
Put the 400,000 there.
Well, the land costs $500,000 in total.
Right, and you borrowed 400,000.
Okay.
So then delete it from part 1.
Well, actually, I put it in part 2. This is how confused I was.
I mean, excuse me,
Like,
part 2. Yeah, delete it from part 2.
okay. Think it's just this part right here.
Yeah. When we in principles 2 and we have 10,000 journal entries, we would do this a different way. With any more journal entries and this becomes unwieldy. And so we do it a different way. So the main thing you just got to understand here is how to place it based on that template, where everything should go. It's not going to make a lot of sense, but this is a concept that is critical if you're going to evaluate companies in terms of where they invest money. Most people
So,
don't learn it, and so they can't make appropriate decisions in terms of how to make investments because they don't know whether the companies are going to stay in business or not. So anyway, okay.
so just to go over this one more time. So number 6, we purchased $500,000 worth of land. We paid 100 in cash and 400 on the long-term note. So for number 6, is it correct that I put number 7 is purchase of an asset? So this is right here for
Correct.
$500,000.
Mm-hmm.
And then the other part to this is down here in part 3, which is transaction 5, borrowed money, $400,000.
Correct.
So do I still have to document the first part where we paid $100,000 in cash? And
Yeah,
where
it's
does that?
already done. 500 minus 400 nets you to 100,000.
Oh, you know what that is, right? Okay.
So that gets you 100,000 on the statement. Otherwise, you wouldn't balance. But the
Oh,
information that's important is the cost 500 and you owe 400,000. You got to show that, because if you're trying to say, well, is this company going to be able to survive? What's going to happen? Blah, blah, blah. That showing helps you in terms of, it's important to know that they owe $400,000, not that they paid $100,000 down. So that's
okay.
what the statement nets to that, but it shows more fully to you. Okay.
I'm kind of scared to see the rest of it now. I feel like the rest of it is good, but then
Yeah,
again,
that's the only little odd part to it. So actually, I'm not overly concerned about, just want to introduce you to that concept. It's just such a critical concept for accounting and finance majors. And, just need to know it, be introduced to it. This is the first time. and then you will see it again when you get the principles 2, and then you're going to see it again when you get the finance. Okay. Okay, we have a couple of other things to hit as we move to finish up. And as I move to stop overly stressing my A students, I don't want to. Okay, students, you know you owe me a bank reconciliation.
Yeah, can you explain that? Because I didn't even know what I like. I was like, man, I don't know. I'm gonna take the L on that one because I don't know what he want, what problem I'm supposed to be
Not
doing, where I'm
now.
supposed to turn it in at.
That's just there's a problem in here. Just where is it at? I guess this problem here. The bank reconciliation comprehensive problem. Just the 8 students need to do that to me. Do that for me. Then the 8 students are gonna begin to work on inventories.
Wait. So the whole bank, okay, that whole thing you just showed us, that's the whole problem for the bank reconciliation.
Right.
Do you have a template for that? You gonna give us a template, or we gotta make that ourselves?
I'll work on sending something to you. Okay, so we start on inventories next class period. Selling these shoes. I have Duncan selling these shoes next class period. And for the A students, if they have gotten their problem in and they've done what they're supposed to do, then they will have a final exam a week from Thursday. And if they pass their final exam, they have a little homework problem and they'll be done with the course. And that way I can work with my B and C students the last week by themselves.
I got a question. Can I get moved down to the C students?
Move that.
Who is that?
Just move me down,
He must
please,
be a
for real.
Republican, you know, he's gonna give up on stopping the virus.
Just Kayon Jefferson, the C student.
Hey, I'm with you.
Oh, Professor, I had a question too. When are you gonna post the midterm grades for B and C students? Because I still don't see nothing. And last time I mentioned that to you, you said that your TA will be reaching out to us or something like that, and I haven't heard anything else since then.
Slowed down. That's why I grade most stuff myself. She says she's gonna have it ready today. If not, I will. But I'll go through it. She kind of volunteered to do it. She wanted something to do, but she hadn't gotten to it yet. But
okay, thank you.
But if you need help on it, you know, you can always check with me and I'll grade yours quickly right away. So in office hours. But she meant well. But she's an MIS major and she just didn't get to it. But like I say, I plan to spend that last week working with B and C students, especially C students, to make sure they can get through. You know, so that's the goal. And the goal is that the A students will be finished. They'll do their theory tests and their inventory exam on next Thursday a week. And they'll be finished a week early from me. Then they can catch up on any other little stuff they got to do. How that sound, Miss Kayla?
Yeah, that sounds good. I just want to make sure, like, are you gonna send us an updated spreadsheet of assignments that we may be missing? Because honestly, at this point, you give us so much work. I don't even know if I got everything turned in right now. Like,
Oh,
and that's just me being truthful. I don't know. Like, I
Kayla.
think I do, but hell, I might miss a couple assignments. You give us about 5 a day.
Oh. The lady got 100 average. And I mean, if you like Dawkins at a 99 average, be fine.
Wow, you could have really left me out, but you
Dang,
really did me
professor,
like
off
that.
time.
All
And
right.
Professor, A students also have some other courses too. So it's not just we don't just have accounting. We have others.
That's why I'm letting you. Well, you can become a C student and go through the whole time, or you
No,
can
no,
finish
no,
that
no, no.
whole
I don't need that.
next Thursday. What are you
I
gonna
don't
do,
need that.
Steve? What
No,
you
no,
gonna
no,
do, Cameron?
We sure
You,
do get a
the
lot of
last time
work.
you're
Be
gonna see me
stressed out over
Thursday.
here.
Next Thursday, the last time you're gonna be seeing me. Well, until next semester. Talking
They'll
about next
come back.
semester, I saw it's only you and one other person teaching
Yeah, so
physical
we
Yeah,
have
so
no
chemistry.
I'm
choice
pretty
to
sure
deploy
So can you
again.
keep it online?
Nope.
Right, we have no choice. This morning, I was like, look, I had to hit up right my professor, and he wasn't sitting too hard. So, boy, it's you again, pretty much. So,
11 o'clock next
You know, your
semester.
best education is to take another, take different professors.
They're
no.
worse.
And some of y'all
No,
need to
Professor
take
Boy, you ain't
somebody
gonna
else,
see
and
me no
then
more.
y'all might appreciate me a little bit more. But see, y'all spoil. Y'all, people say I'm
We
too
Can
easy.
spoiled and we getting all these
And that's
tests.
what other
That's
people
spoiled.
say.
Spoiled. I can't wait to
we
see
keep it
what.
online for next semester,
Yes, please.
please?
You comfortable at home anyway, please.
And I'm comfortable at home too.
Saw that too. Yeah, yeah. We should keep it online.
Dixon, you better
Huh?
get you a computer for Christmas, all right?
You gonna buy me one?
Get you a
Dang.
computer for Christmas. Every
Okay,
time I get ready to raise something, I come to Dixon, there's nothing in there. And I gotta
because
So
go.
I
is
don't
that
know
a
why it
no?
does that. I have to email it to you.
Well,
It
you
always
get
shows
you a
a
new
blank.
computer for Christmas, okay?
All right, I'm gonna email it to you. My
Yeah,
card.
I know. I'm used to it. All the time emailing.
All right.
You worse than Dawkins.
So we gonna stay online
You
next
really
semester
Yes.
had
or
to go and do me like that again, sir. You know you did not have to do me like that again.
Well, y'all
Hey,
relax.
I should ask at the end of class, but I want to know. I got this dude named Ronnie Alexander, and I
Yeah,
don't
he's
know.
just as worse.
Ooh.
I heard he was all right
No,
though.
I heard he was horrible.
Dude, listen, I ain't got time to
And
be in
y'all
school
boy,
forever,
You can
so
learn
I
from
gotta
anybody. You just go to the professor, see if they want to do it. You can do.
gotta catch the wave during the wintertime. You feel me? But
Nah, I need a break. Okay, I need a break.
For real.
All right. In terms of accounting two is more difficult, so I would not take that on a short time frame in terms of learning. You might
you
get out of
would
the
have told me that after I already registered for the class.
oh
Just email your advisor.
no,
They can change it for
no,
you.
Williams, no. You just need to change that. I mean, because down the road you got to pass CPA exams, so you can't take shortcuts. Okay, non-current assets. See, we've done the cash and all the current assets. All right, insurance, everything else, prepaid insurance supply. And now we get into property, plant, and equipment. These are all the assets that are going to last more than a year. Then we have the intangibles, goodwill, and stuff like this. So we separate these from current assets because current assets, get used up within a year's time. These assets are going to last more than a year. So that's the big distinction. And you can see this balance sheet presentation, the cost less than the various ways to do it. But this is how the balance sheet looks. Depreciation, we just allocate the cost of the asset. We bought the asset. It's going to be used up just like supplies. There are various depreciation methods. We're only using straight line and declining balance, double declining balance. Some of the years digits is similar, units of production is similar, they accomplish the same thing, but we simply had 1 and 2. So once again, depreciable assets, they're just prepaid expenses. Let's look at how depreciation works. You buy a car in year 1, it's worth $4,000. At the end of the year 1, it's only worth $3,000. At the end of year 2, it's only worth $2,000. At the end of year 3, it's only worth $1,000, and by the end of year 4, it's not worth anything. And so depreciation expense, that journal entry reflects this, that your car goes from a value of $4,000 to a value of 0 in 4 years, $1,000 in depreciation each year. Can everybody understand that little picture?
Yep.
Yes.
Okay.
Yes.
So the car gets smaller and smaller and smaller. So we buy the car, we debit equipment, credit cash. Then here's that adjusting entry, debit and depreciation, crediting accumulated depreciation. And here's that balance sheet presentation, Miss Kayla. When we get to year 2, it's going to be 2,000. The AJE is the same. Now it's 2,000. And on and on and on. So in straight line depreciation, okay, very important, we determine the total cost. We reduce that cost by the salvage value. Okay, so we reduce it by the salvage. And then we divide by the life. We've been assuming that the salvage is 0. But actually, when they're salvaged, we reduce the depreciable cost. And we'll look at that in an example and then divide. Now, when we go to double declining balance, we're going to ignore the salvage. We won't depreciate below the salvage, but we're going to ignore salvage. Let's see if we can look at an example. We got a car that costs $50,000. The salvage is 10, and the life is 10 years, okay? Those are the facts. Calculate straight line depreciation. Costs, we subtract out the salvage. We only going to depreciate on 40,000 when we have salvage. So if we had salvage, we would reduce the cost by the salvage because we can't depreciate it below salvage. Now the straight line rate is actually 100%. And so instead of just dividing 10 into the asset, we divide 10 into 100% and we get a rate of 10%. And then we multiply 10% times this cost minus salvage, and we get 4,000 a year. Accumulate depreciation the first year is 4,000, 8, 12, 16, 20. And so, is that right? 16. Okay, yeah, it's 10-year asset. So it's building each year. By the end of 10 years, this would be $40,000. So let's look at it again. The asset costs 50. So you got a template here, 50. The salvage was 10. So we only are going to depreciate the 40. We're going to take 100% the straight line rate and divide by the life. So it's always 100% divided by the life to get the straight line rate of 10%. So if the life was 5 years, what would this rate be?
20%.
20%. Then we just multiply it out, get the expense, and that expense stays the same each year. The depreciation bills at the rate of $4,000 a year. So straight line depreciation, that's what we've been using. We just added a little thing of some salvage now, but this table shows how it's done. Okay, that's an even amount each year. Let's go to double declining balance depreciation next.
Real quick before you move on.
Yes.
So when it has a salvage, does that mean like if it depreciates all the way, it's still gonna be worth something? Like if I were to buy a car.
Yeah, like a car. Typically, at the end of 4 years, your car is worth something. It's salvage value. So if we have salvage, we won't depreciate it below salvage because that's still an asset that still has value.
Okay.
Okay. So this is not hard now, so don't make it hard. This is easy. Let's go to double declining balance. Got to think a little bit here. First of all, same example, the cost is $50,000. But we're not going to utilize salvage in our calculation. We're going to get a DDB rate. That rate is the life divided into 200%. See, the straight line rate is 100%, so the double declining balance rate is 200%. You could have a 150 here if you want it, but we're only working with straight line rate 100%, DDB rate 200%. So divided by the life. So we divide 10 into 200, we get 20%. So the first year's depreciation is going to be 20% of 50, $10,000. Accumulated depreciation is 10,000. Does everybody see line 1? 50, 20%, 10,000. Okay. And notice that whereas we had 4,000 in expense with straight line, we got 10,000 now. So a lot of time a business wants to use accelerated depreciation. That gives them more expenses. They pay less tax. That's the bottom line. Now in year 2, we have to come over here and get this depreciation and subtract it from the cost to get a new book value, 40,000. We take 20% of the 40, so now we're at 8,000. So we depreciate a declining amount each year. Straight line, same amount every year. DDB, 8,000. And so now the accumulated depreciation is 18,000, year 1 plus year 2. Now when we get to year 3, we got to add 10 and 8, 18. We got to subtract 18 from 50 to get 32. So we just take all the prior depreciation, 10 and 8, which is 18. We subtract it from the 50, we get 32. Now we're going to apply the 50%, the 20%, excuse me, to the 32,000, 6,400. And so then 6,400 and add to 18,000, we get 24,400. And so, whereas with straight line, we got an even amount every year. With declining balance, we got a declining amount. We take it more early. This is how mortgages work. You're gonna pay more interest earlier. So, and eventually, this changes, and so the amount of the straight line of the DDB depreciation is less than the straight line depreciation. All right, time for you all to go to work now. Works.
Wait, you ain't got You ain't say if we had any questions, because I'm sure a couple of us got questions. I got questions.
Oh, you got a question? Okay.
Yeah. So the DDB rate, 200% of the life, is that gonna be the same all the time? Like it's gonna be 200% every time?
Every time,
Like no matter what.
no matter what.
So you're gonna do 20% times whatever the book value is every time you see a double declining balance
And a 10-year life.
in a 10-year. Oh, well,
See, so if it
okay.
were a 5-year life, what would this number be?
Would it be 40%?
That's correct. So notice right here what I have, 200% divided by the life. 100% divided by the life. So you got to always put the life in. Got it?
So basically, how much the life? Okay, I got it. All right, I got it.
That's your formula right there. Thank you for that question, Ms. Kayla. I'm sure that helps a lot of people. Okay, so see if you can do 6 and 7 straight line, and then 6 and 7 double declining balance. Six and 7 on the straight line, 6 and 7 double declining balance. C student responsible for straight line. Who's that told me they want to be a C student? Who said they want to be a C student? And the A and B students would do double declining balance. I know they already got the straight line worked out. So on the straight line, everything is staying the same except what?
The accumulated depreciation at the end of the year.
4,000. Then it's going to be what?
28,000.
So everybody should be able to do the straight line of appreciation. It is just the same. See, I can't paste as much over here, right? So you got to make calculations. So what number is going to come here?
$16,384.
$16,384. I'll take your word for it. What's 20% of 16,384?
$3,276.80.
Would you go with 3,276? So now notice this change in the straight line now. I mean, the straight line exceeds it. What's this number going to be?
$36,892.80. So we're not putting the change? You don't care about change?
No, I don't care about the change.
$892. Yeah.
$896. So what's this number going to be now?
$13,107.
What's our depreciation going to be now?
That number right there, I think I got $2,621.
621. 2,621. So what do we have here now as the
39,514.
39,514. So let's see if we can add another year.
Wait, Professor, so why does it go up on the last one? Like you said it was supposed to be 20% of each of the depreciation years, right?
Did it go up?
Because it went from like, oh wait, it's supposed to go up. Never mind. I'm looking at the wrong thing. My bad. I see what you're doing now.
Let's go to year 8 and year 9. What number is here now?
10,486.
10,486. This is 20%. What number is going to go here?
$2,000. Wait, 2097. Shoot, I was trying to get there. Hold on.
I got a different number.
You got a different number than 2097?
Mm-hmm.
Right. Well, go with that then. I mean, how you get different? Okay, have to go back up here.
Remember, we can never depreciate below the salvage. So once we get up to 40,000, that's why I did the next year to show you that.
Oh, well, okay. Okay.
So that's how I thought I'd do that. Yeah. Okay, so that's all depreciation is. So, we looked at it, we look at the presentation. We're only looking at straight line and DDB, straight line for the C students. But it's not a big deal in terms of that calculation, just a mechanical amount. Then these numbers each year are going in the AJE. So up here to 4,000 in the AJE. These are going to be in the AJ, the AJE. So that's how they fit in terms of the AJE. So we introduce it so you aren't seeing it for the first time. Then we come to it now. Any questions? There should be some old videos in there on inventories. You can look at them or you can delay on those. It's up to you.